Hey everyone, Sam here. We can get started if everybody's ready. Good to see everyone. All right. And yes, it does feel like it's been probably feels like it's more than a month since our last time we were all together. Excellent. Good to see everyone. So who is anyone here brand new to the supply and demand strategy we cover in these sessions? Anyone brand new to our supply demand strategy? Okay, Grace. So you haven't watched any, have you watched any videos on it, or just you're really, really new, which is fine. And the reason I ask is because I want to make the most of most of our time together during our session here today. So for, okay, got it, got it. All right, so we're going to do a combination of two things today during the session. We are going to, every morning, Monday through Friday, I do a live pre-market. Well, most of the markets are open, but before the U.S. stock market opens, we do a live trading and analysis sessions. We look at the futures and Forex and equities and all that to figure out when we apply the supply demand strategy and to follow our rules and figure out where prices are likely to turn and where they're likely to move to. So we'll start out. I want to share with you the prep screen that we went over this morning, and then we'll dive into the live markets, right? So we'll do a little bit of, again, review and education of the strategy, and then we'll dive in live into the markets and apply it. If anyone here wants more information and that we have time to go over here in the FX Street sessions, you can always attend the advanced workshop here on the right. I don't normally do these, but I've been doing them for I think about a month and a half, so I won't be doing them too much longer, but I am doing one this Wednesday at 11 Eastern, and then the next day in the evening. So if you like, I'll just post there's the link in the chat if you want to, if you're interested in that, you want to register. And that we'll go a little bit deeper into, we have a little more time in those sessions than we do here. But in the interest of time, let's dive in. So again, for those that are kind of new to this, I developed a strategy many years ago on the trading floor of the Chicago Mercantile Exchange, focusing on quantifying the market's real supply and demand, what that looks like on a price chart. I had buy and sell orders in front of me from banks, financial institutions, money managers, you name it, and was able to see that how and why prices move in markets is just all about supply and demand. So seeing that at the level of orders, then looking at price charts and seeing those buy and sell orders on price charts, that's where the strategy comes from. It was a really good experience, and very fortunate to have spent that time there, and kind of stumbling upon that whole just concept, and then just transferring it onto a price chart. That's what I spent my time doing, and then I left the trading floor, went home, and started trading. Right? Okay. So let's go over that, and so these are all from like yesterday or the day or late last week. And so we're going to look at these for a little bit, a few minutes. So by the way, the screenshot that you see on the left, this is a screenshot of the live morning trading sessions. And all of you actually will have an opportunity to, if you attend the workshop, you'll have an opportunity to be in these sessions for a week. And you can see, how we apply the strategy. You'll see the members in there. You can interact with them and with us and all that. But anyway, let's dive in. So let's look at the live setup here. So as I mentioned before, when we focus on the original supply and demand strategy, right, it's all about two things: structure and location. Structure and location. So let's talk about location first. And let me even take it more basic, right? All of this at the end of the day, how and why prices move in markets, it's all about supply, demand, and fair value. If you think about any items that we buy, just to lead our normal lives, right? We go to the gas station, we go to the food market, we go to the appliance store, anywhere, right? Buy something on Amazon. How all of those things are priced is the same, right? It's all about supply, demand, and fair value. Are we all on the same page with that? Okay. And so when we look at the chart here, one of the things that we do is a lot of people think you look at a chart and the first thing you should do is find supply and demand zones. That's not what we do. Okay. The first thing that you might want to do, and I'm just sharing our rules, right? These are the original supply demand rules. The first thing you should do is identify fair value, the middle. So clearly look at this chart over here on the left, right? During this session with our members, we identify this area, which represents fair value. Right? Now, how do we know that? Well, fair value has two characteristics that we focus on. Number one, where is the most recent area where we see the majority of trading activity? The vast majority of trading activity, most of it. Where's that most recent area? It's right here. The second characteristic of fair value is this wide and whippy price action, right? Meaning the fact that price can move up and down so easily in this area means there's a lack of a significant supply-demand imbalance, right? This is where, at that point, the majority of buyers and sellers in this market agree to buy and sell. Doesn't matter what market it is. We'll talk about that in a moment. Once we identify that, we then look above that area for our qualified supply zone. And then we look below that area for our qualified demand zone, which we didn't do here. Okay. Now, when it comes to structure and location, let's talk about location for a moment. What we just went over tells us location of this supply zone is pretty good. On the structure side, there are 4 things that have to be present for this to be a qualified supply zone. Okay, there are 4 things that have to be present for this to be a qualified supply zone. We don't have time to go over that today, but just remember that's structure, location. Another way to say all this is, at this supply zone here, supply, right? Another way to explain it is competition to sell. Unfilled sell orders, lots of unfilled sell orders, right? So another way to say this is unfilled orders or supply cause prices to turn. Filled orders, right, or where the majority of trading activity is, fair value, facilitates price movement. That's what's important. Over here, the result, as soon as price comes up to our supply zone, unfilled orders or competition to sell at supply pushes price lower, right? Causes prices to turn. Fair value or filled orders facilitates this price movement. Fair value pulls price back to it. So it's always this governing, this push and pull governing dynamic at play, right? Competition to sell at supply pushes price lower. Fair value is the natural magnet for price that pulls price back to it. Why? Because that's where the chart is already telling us that currently that's where the majority of buyers and sellers agree to buy and sell. The action to the left, Sam Bragg, is one of those 4 components, but this one certainly qualifies. Right? Now, the fact that this was a European bond market or a major bond market, which is most important, what does the reason we were going over this with our members yesterday and Friday was because, well, obviously there's an opportunity here in this bond market, But the presence of bond market supply helps equity index markets do what? Suggest that equity index markets are going to do what? If and when prices reach the supply zone here. Yes, it suggests that equity index markets are going to move higher. This is one of the inverse markets we use for stocks. So this was yesterday. Prices turned lower at our supply zone in the bond market. That helped push equity index markets higher yesterday. Okay. Right. Okay. So the equity index markets did push higher. If we look here real quick, now this one met entry last week, right? Early last week, I believe. You know, when you look at this supply and fair value down here, it's the same picture here, only opposite. Demand, fair value up here. Notice those two characteristics are present here. The four qualifiers for structure are here. So structure and location is fine. And for those that wanted to, we're able to buy the stock market when it's on sale at demand. Competition to buy at demand pushes price higher. It's the same thing over and over and over. And again, anything we're talking about here, whether it's a day trading opportunity, swing trading opportunity, longer term position type trade, investment, it's the same set of rules, the same logic. So yesterday's continuation of the big rally from the last few days from demand, right? Bunch of stocks met entry also at demand and rallied, but that just brought prices up to some near-term supply zones. One of the supply zones we had was in the Dow. Now you don't see the supply zone here, but when you include pre and post-market data, this is the DIA, which is the ETF for the Dow. You want to trade the entire, you know, Dow as a stock, it would be the DIA, right? So if you include pre and post market data, there's a really nice supply zone in here. We go over that obviously with our members. Now notice price here came back but could barely get there. And notice here and here again, right? That's that. Price can barely get there and falls away. Both of those things suggest there's a big supply-demand imbalance here on the supply side, right? Structure and location rules are set, and over the last day or so, price comes up to supply, and then today, yesterday and today, price falls. The distance from demand, the fact that price was at supply, you know, that's, there you go. That's just supply demand at work. Does that make sense? Now coming into this morning's session, and we're going to look at the live markets in a moment. We always in the beginning of our session use a prep screen, right? So here's the prep screen for this morning, and basically we always have our supply demand fair value guide over here. Okay. So looking at our prep screen or the evidence, let's see, just trying to get rid of that, but anyway, we focused on, there's the evidence, we focused on, this is this morning, the fact that the dollar was nearing a couple demand zones on top of each other, that also suggested that, well, strongly suggested that we should not be buying any stocks or the stock market at or near current price, which again was early this morning, right? And instead, we'll look for equity index markets to decline from this area and potentially come down to demand zones. Dollar demand was a big factor in that. Also, the fact that we had equity index markets, you know, trading up into supply. Not a lot of them, but one or two yesterday. Does that make sense? Now, if we go to the live markets, you can see, for example, well, this morning the Dow fell. All the equity index markets have fallen quite a bit. If we go to that Dow chart, you'll see, you know, again in the early going, right? We had a decent sized gap down. We've since rallied back up into here, and again are likely to end up lower from this area, but you can see why, buying up in this area yesterday, today, not a good idea at all. We want to wait for prices to come down to demand, um, just like that. I'm sorry, that one, right? Make sense? Everybody on the same page? And this is for, this is we're talking pretty much specifically equity index markets at this point, but we'll apply this to, a number of other markets as well. So I just wanted to kind of share with you two things. One, a deeper dive into the strategy and strategy rules for understanding, and then of course just show you kind of how this plays out with our planning and prep and all that. Does that make sense? Okay. Now, if we come to the Nasdaq, we actually developed, right? So this market, you can see how far we are from any significant demand in this market. We did come into today with a supply zone that was developing. That was a few hours ago, right? So if prices rallied up to the supply zone, if shorting the stock market is in your trading plan, there was an opportunity to do that here. Obviously, this market has not come up there. At the same time, again, like I said, our demand zones are lower. Does that make sense, everyone? Are we all on the same page? Again, the most important questions that you want to answer if you're new to this there's two questions. How do markets really work, right? Like, how do prices move and turn in markets? It's all about supply, demand, and fair value. Okay. And then there's nothing wrong with buying the stock market. It's buying at demand, which is what we want to do, right? And I think we came down to some small time frame demand zones. All right. But and then the other thing is, don't ever forget to ask yourself how you make money buying and selling in the markets. And I know that's such a simple, basic question that maybe doesn't even make sense. It's like, well, of course you have to buy low and sell high. Correct. But when you look at the strategy, the strategy that people are using, different strategies people are using, most of them fail to ask themselves that question because does anybody use any chart patterns for their trading or indicators and oscillators or any trend traders here? Anybody use trend, things like that? Now, I know for people that have probably been coming to my supply demand webinars for a while, you're probably not using those things, but you probably know how they work, right? So remember, especially in the early days when people would, share strategies with me, I would look at those strategies, and the question I would ask myself is, okay, here's your strategy, right? You're supposed to buy here. The first question I was asking myself is there another strategy out there that has people buying into that market after this person buys into that market? Meaning, whatever your strategy is, wherever you're entering the market, you better make sure that there are other strategies or there's another strategy that has people buying after you, right? So Peter, I see you're sharing stochastics, RSI, MACD. So it sounds like maybe you use those for to get into the market, or it sounds like Brian, you're using, let's see, trend and get help from double top patterns. All right, so that double top pattern, right? So you have the one top and then you have the other top, and then you draw the neckline, right, at the bottom of the double top, right? Is that what you do, right? You draw the neckline down there. And then what are you supposed to do when price goes below the neckline? So you have price drop all the way down from those double tops, and then you draw the neckline. And what are you supposed to do after price trades below the neckline? Right? You short. Yeah, you're supposed to sell short. Well, if you're going to do that, you better make sure that there are other strategies out there that have people selling short after you. If not, it's going to be difficult to make money. Does that make sense? And I know it's such a simple conversation and simple concept, but if you really think about it and look where people enter the market, there's a reason why, around 90% of active traders lose money. Most people are trained to be one of the last buyers or last sellers in a market. And that's again why it's so important to understand that how you make money buying and selling in the financial markets is exactly how we make money buying and selling in other markets. Make sense? One more thing on this, just because it's such an important point, and I want to make sure everybody, has the best chance of success is, have you ever heard anyone say, boy, if I only took the opposite side of my trades, I'd have so much money, right? If I just took the other side of all my trades, they'd all be winners. They say it's like when I buy, the market goes down. When I sell, the market goes up. Have you ever heard people say that? Newer traders say that. Well, yeah. Why is that? It's because when they get into the market, who's going to buy from them? Okay. When they buy into the market, is there another strategy or a group of people that are going to buy after they buy at higher prices, or sell after they sell at lower prices, right? Okay, let's get back to the charts. So now that we've gone over all this, I can go to any market you want. If there's a market you want me to take a look at, just let me know, and it doesn't matter. Stocks, futures, Forex, you name it. The S&P, all right, we can go there. And then we'll go to that Forex, that pound Forex market, no problem. So in the S&P, the next set of likely demand zones, not that one. I think I just showed you this one, but we go here. A couple demand zones on top of each other, starting at the 44, 42.50 area. Now that's quite a bit lower from current price. It's not that far. Remember, we're looking at only a 30-minute chart here. But, we have to be careful buying anywhere in this. The fact that price traded here so much strongly suggests that there's a lack of a significant supply-demand imbalance inside this. Does that make sense? Okay. All right. And then if we go to Sam Bragg, you might want to also keep an eye on the SPY, which is the ETF for the S&P, in the 449.50 to 448.80 area. Right, that's sitting just below this gap area right here. We still have a little ways to go to get there, though, but there's likely a demand zone sitting down there. Okay. Yeah, Sam Bragg's asking a good question. Why not the origin of the gap? Most of the time, that's not where the supply or demand zone is. Gaps are great, but typically your qualified supply or demand zone is going to be just beyond the gap. So for demand, it'd be just, often you'll see it just below the gap up, or for supply, often just above the gap down, right? You have to focus on that qualified supply or demand zone. Okay. Yep. We'll look at gold and those other markets. And I'll try to get all these in. There's a lot of markets here, but let me try. And looks like the next one is let's see, the dollar Canadian. We can certainly look at that. Just looking on the list. Okay, just wait for these charts to come up. Right, there we go. So recently the dollar Canadian came down to I'm laughing because it's just been coming down to our 120-minute demand zone so many times We've been over this level a lot. Anyway, notice it's going a little bit deeper into the zone each time. That's exactly what we expect. And that's because every time you come down to a demand zone or up to a supply zone, more of the unfilled buy orders that make that demand are being filled, right? So our rule is, once price goes 50% into the level or more, we don't take it again because there's just not enough, usually not enough demand left. Now, on the supply side, we can take a look. And for that, we're probably going to have to go to a smaller time frame here. So we can see sitting just above the 127 area, we have really two supply zones, more than that come into play. Okay, as far as a qualified supply zone, we'd have to go a little bit higher. So that one's likely to be right up here in the 128.23 area. This one looks far from current price, but this is only a 60-minute chart. Okay. And let's keep going. Yeah, Grace, we will definitely look at the dollar in just a moment. In fact, why don't we go there now, because that's such a key market for today. So so remember in our prep right here for our members, the dollar early this morning was sitting right at our demand zone, and a rally here likely meant a drop in equity index markets and of course FX markets against the dollar. So we've gotten a little bit of we got a nice little bit of a rally off that zone so far today. This is all in the last 2.5 hours, and not much of a rally, but we're getting a nice bounce here, which is helping push equities lower and other markets against the dollar lower. But the main point here is we're in an area where we have two demand zones not too far from each other. And I believe all of that is inside or in the same areas. This is the same area, right? If you take it just a little bit lower. So generally in this area, some dollar demand. And you can see we just hit the first one and are getting a nice little bounce off that. So that kind of confirms that we are in an area where the supply demand imbalance is likely pretty big, right? Big banks are buying dollars in this area. And the chart kind of told us that already. In the bigger time frames, we can see where we're at coming off of our larger time frame demand zones here. And, I wouldn't be surprised at all if there was a push up to the 97 area. Now, what is most of the world thinking as far as the dollar goes? Is most of the world thinking or saying it's going to go up or down? Saying right now, given news and all the big financial experts on TV. Yes, most people are coming out screaming, saying the dollar is going to get crushed, right? Because of all this spending and all this everything. You have to be careful though, because the chart is not necessarily suggesting that. The demand zones are holding up. I mean, the dollar really hasn't moved much at all recently, but a push up to the $97 area would be opposite and a big surprise to what most of the experts on television are talking about. Okay. That, by the way, would likely push the euro, and I know we're looking at a weekly chart here, down to the 112.78 here. Okay, much, way below where we're at now. And believe me, I know we're on a webinar. I know a lot of people are going to watch this webinar on YouTube, but I just need to be real with what the charts are suggesting. Now, could the euro come up to this supply zone? It's really just sitting in the middle, right? It's really just sitting in the middle. But don't be surprised if it comes down to here. All right. when you hear a lot of experts on TV all saying the same thing, they're kind of already talking their position. And if that position is out there already, that's why, you often see things go in the opposite direction. Okay, so we started with the dollar, and I think we covered that. Notice there's likely to be some supply in the 93.40 area above. Looks far, but it's only $1 above where we're at right now. Okay, this is certainly going to be a problem, but this is not a qualified supply zone that we would short at. Okay, but that one is up there. Okay. So that's there's a couple demand and supply zones there. Moving on to some other markets. Let's take a look at this one here. Whoops. Oh, here we go. This one, sorry. Let's look at the euro against the pound. I see someone in the chat wants that one. I'm just waiting for this data to come in here. All right, so this one, let's see, did this touch? Looks like it barely just missed the 8,600 supply. And notice price attempted to get back to the supply zone here. Again, almost got back to the supply zone here. It doesn't look like it touched it. By the way, for those that have taken the, I don't know if any of you are members of our Pinnacle Institute, but if you've taken the class, remember we do enter positions before the zones. But having said that, this evidence and this evidence, the evidence that price is attempting to come back to the supply zone and can't, strongly suggests there's a big supply-demand imbalance up here. In other words, banks are big sellers of this market right up here, just above 8,600 and up to here. Okay, make sense? So another move into here, we would expect a decline. And again, look at all of the trading activity here, right? So filled orders or the novice space, right? Whatever you want to call it. Price should not have a hard time going through this area. Okay, let's keep going. I know someone wanted to look at the at gold today, so let's take a look at gold. Currently trading 169.50. So this was a demand zone we gave to our members yesterday, right? So price, oops, price is just kind of sitting here at the moment. Not a big reaction off this zone, but we do have two demand zones on top of here. They're gray because location is not great. Okay, but anyway, there's that. So on the demand side, we have that zone and then the demand zone just below that. On the supply side, this is the gold ETF, GLD. Okay, gold ETF. So right up here, 171.75, which is not too far above where we're at right now. Again, price is bouncing off our demand zone there, but keep in mind that up in the 171.75 area, we're likely to see supply in gold. Looks like banks, financial institutions are big sellers of gold up in this area. We do have plenty of evidence back here that there's a big supply-demand imbalance up here on the supply side, right? Because price is attempting to come back to that zone and can't make it. And then the next, while there are a couple demand zones on top of each other here, below all that, so if you want to go higher probability, remember I just said that demand zone up here is not great location. If you want to have much better location and get below all of this, right, which is key, that brings us down to the 164 gap demand. Okay, so in this case, the demand zone is at the gap, but that's rare. That's not usually the case for us. Right, so that would be an opportunity down there. Okay, let's keep going. And let me get to, I kind of keep looking back here to remember what markets people wanted to go over. All right, we did look at that euro. We looked at the Dow. GC is almost always going to look the same. We can certainly look at Bitcoin. Not a problem. Remember, we apply the strategy equally to any market. Even though, for example, Bitcoin, which is a cryptocurrency, is something completely different than, for example, corn, which is something we all eat, but there's a market for it. Keep in mind, behind the computer screen, the decision to buy and sell corn and the decision to buy and sell Bitcoin is still made by a human being that's making a decision based on ultimately, right? It's just all supply and demand. It doesn't matter whether it's Bitcoin or corn or S&Ps or Microsoft or the euro, right? These are all just markets and that operate and work the same way, right? It's all that same governing dynamic of supply, demand, and fair value. So for Bitcoin, we've looked at this zone before. Remember we looked at this 48,850? We've been looking at this one for a while. Bitcoin recently had a rally, but it just brought it up to our gap supply zone here. And there is room down to the 33,000 and change gap demand zone down here. 4K, you mean like actual 4K, or do you mean 40K? Not sure. 4K is way down here. I think if it goes to 4K, it's probably over, right? But you may mean 40K, and 40K would be right here, right in the middle of all this. So we wouldn't expect this. This would not qualify for demand for us. Oh, so you mean the 4K that's like way down here, like way down there. You'd have to get through these demand zones first. And you have two gap demand zones that price has not even come back to, right? So I wouldn't even really think about that at the moment. If we take out demand zones and have a fresh qualified supply zone, that's when you're likely to see the really big move lower in Bitcoin. Okay. I had a position in Bitcoin for many years, but just got out of it this year. Full disclosure there. I think we've talked about that. All right, let's keep going. So that is Bitcoin there, and you could do this on smaller time frames too, right? In fact, during the last little bit here, we've been looking at many different time frames. Plenty different time frames. FTK, yeah, it'd be great to come back to London. Just need to get this this COVID mess over with, and by that I mean more all the restrictions lifted. That would be great. Okay, let's take a stop at the Nikkei. Let's look at the one of the big Asian equity index markets. And I believe right here on this chart, just be aware, now this is not, it doesn't appear to be at risk of meeting entry, today or tomorrow. However, we're usually together once or twice a month, so keep an eye on that 28,540 area as likely to be significant supply up there. And then on the demand side in the Nikkei, we've got the 27,163, and then also I think this one is, yeah, this one's pretty far from current price. Oh, the 26,700. We've looked at this one a bunch of times. So this is the high probability one that's below the range, which is, that's almost always going to be the higher probability one. Great question in the chat. And we've got this question before. What's the difference? I think what you're asking is, what's the difference between supply and demand and support resistance? Huge difference, big difference. Very, very big difference there. Let me address that just to make sure everybody's on the same page. And we can go, we can go here, for example. So for, when you think of the term support and resistance, so to draw a support line, right? This is conventional technical analysis we're talking about, right? All the chart patterns, the indicators, oscillators, things like support resistance. To draw a support line, how many points do you need on a chart? Someone tell me, what are the rules in all the trading books and all the millions of pieces of internet education on support and resistance? So at least 3 points, okay. So like these, like right here, right? You need like maybe 2 or 3, you're saying 3 points, for example. There's a lot of, so first of all, supply, demand, and support resistance are extremely different. They couldn't be more different. Okay. Here's one of the reasons, and we could spend a whole hour on this. So you need, hopefully you've been following me so far, even just in our last 40 minutes together, talking about supply and demand. So you need 3 points to draw a support line. And then what are you supposed to do the next time price comes back to that support line? So price has now touched it 3 times, and now price comes back again. What are you supposed to do? Yeah, you're supposed to buy. But think about it. If you understand this whole supply-demand concept, does that make any sense? And don't take my word for it. Just think the logic through. Every time price comes back to that support line, right? Like the rule of 3, right? So every time price comes back for, once, twice, 3 times, what's happening to the amount of demand at that price point that price has now come back to 3 times? What's happening to the amount of demand? It's being filled. It's reducing. Yeah, it's being reduced. It's exactly less and less, right? So therefore, the conventional term support and resistance, what they're actually saying is, don't take the high probability trade. Wait till it's a low probability opportunity. Wait for the buy orders to be filled or gone, and then buy. Does that make sense? Okay. And if you look here, notice here's a little demand zone, right? A couple demand zones on top of each other. Price comes down to this demand, some of the buy orders are filled. Price comes down again, more of the buy orders are filled. And here's a third time, right? Now you've got your support line. The next time price comes down to that zone, there's no more demand, right? You've been down here 2 or 3 times. So price is going to quickly go down to the next fresh demand zone. Well, now you've got a point. As soon as you have 2 or 3 of these, you follow me? Does that make sense? Okay. But look, you don't need to get in too many arguments with people. I saw that comment in the chat. I'm trying to think of the polite way to say this. Well, let me start by saying you or I did not create, how the markets work. It is what it is, right? It's just all a function of supply and demand. But don't forget, well, I have to be careful how I say this. I don't want anybody losing money, right? But the reality is, right? The reality is there are winners and losers. I didn't set up the rules of the game. You know, right? We didn't set up the rules. That's just how it is. So, you don't want everybody buying at demand and selling at supply, right? Here, let me put it this way. If we want to buy at demand here, like in this, see the screen at, like this is our demand zone from last week or the week before. If we want to buy here, we need people to sell here, don't we? If you want to sell short up here at supply, which is this one from yesterday, we need people to want to buy there. Does that make sense? Okay. So if people want to buy at supply and sell at demand, you might want to not want to talk everybody out of it. I think you get the point. All right. And again, we don't want to see anybody lose money. So if you want more information, and we'll spend a little more time on this, go take things a little bit deeper. For those that came late, again, I'm probably going to be doing just a few more workshops. I haven't done many of these. I started doing these about a month and a half ago. We have other people that do these, but I am going to be doing these next two here. The next one's actually tomorrow, and then the next day, Thursday. I put the link, here's the link in the chat to the registration page if you want. It's a free event. It doesn't cost anything, and we'll keep going over this and take it deeper. All right, good to be with you today. Good to be back, and we will see you next time. All right, have a great day, everybody.